Hey everyone, welcome to another episode here of the Satch Bernhardt podcast. I'm really excited to have Zach Haptonstall today here. Zach is the CEO and founder of Rise 48 Equity, um, and he has transacted over $2 billion in real estate to date. They focus on multifamily value-add apartment complexes. If you have done deals with us, you probably have seen or known of Zach because we have partnered many deals together. So really excited to have it on the podcast. In previous uh, times that we have recorded stuff, we have recorded a lot of stuff together, but it's always been deal specific about a deal that we're about to do. So this time I kind of wanted to take at this time to go a little bit broader on getting to know Zach a little bit deeper. Zach, welcome to the show.
Yeah, no, thanks so much, Satch. Really appreciate it, man, and appreciate you having me on. Yeah, like you said, we've already been partnering on deals together for a while, and I've been on the very long waiting list to be a guest on the podcast. I know there's much bigger exclusive celebrities ahead of me, so I appreciate my time came, Satch. So thanks for having me on here.
I love it, man. That's awesome.
Yeah.
Dude, so to kick us up, Zach, I wanted to know more about you and your upbringing. Did you
Yeah.
always know that you were going to be an entrepreneur? Did you know you're going to be in real estate? Were your parents involved in real estate at all? Tell me about that.
Yeah, good question, Satch. And so yeah, honestly, I did not know I wanted to be an entrepreneur. My family was not, they were not entrepreneurs, no real estate background, no real estate connections or family ties. And so, I was born and raised in Phoenix, Arizona, just like a, regular lower middle class family. My dad worked in construction. My mom, was like an HR person for a company. And so, like most people, Satch, I was taught, just go to school, get good grades so that you can go to college and get a good job. And it was a very, I don't want to call it mediocre, but middle class upbringing. And that's the way I was taught. So I never necessarily thought about starting my own business. I had always kind of envisioned big things for myself as a kid, but I think I was thinking more of like an employee mindset, and so I, I had a football scholarship to like a small Division II school, and that was cool for a little bit. Then I realized I wasn't big enough or good enough to go to the NFL. And so then I was like, okay, well, I like sports. I want to be a sports reporter. And so I got a journalism degree, and I was a live news anchor sports reporter for Arizona PBS, and hosted a show for a little bit on a Fox Sports network. So that was cool, to be
Have
on
you ever
live.
gone back and seen your videos from when you recorded a lot of the stuff?
It's been a while, but yeah, it's kind of cringy. It's kind of fun. I don't ever. So the funny thing is, Satch, I've never even watched a podcast recording that I've been on. I've been on like over 50 of them. Like I don't. It's not that I'm like don't like to watch. I just don't. I don't care. Like I don't watch myself. That's kind of funny. But yeah. So I did that, and that was cool at first. But then I was like, man, you don't make any money in journalism. It's not as great and glamorous as you think. And when it's your job to be like a reporter, it's not the same as being a sports fan. So I was like, man, I don't want to do this. This sucks. And I had all this student debt. So I decided I don't want to be in journalism. I need to make money. Right. And so I was reading some of these cliche books that a lot of people have probably read, like Dave Ramsey, stuff like that, how to get out of debt. And so I'm in my early 20s, and I'm like, I just need to make money. And so I went into healthcare marketing, and I just had some like connection. This guy I knew making like $35,000 a year, but I knew you could kind of elevate to make more money. So I started as a marketer, director of marketing, and then I became a co-owner in this hospice company. And so I was fortunate. By the time I was 23, I'm making like 150K a year, making more money than both my parents combined, what they had ever made. I bought a house when I was 23. I started going to night school to get my MBA, my business degree. So I was working like 50, 60 hours a week, going to getting my MBA full time. So by the time I'm 24, I got the MBA, I paid it off with cash. I have no debt. So by the time I'm 25, 26, I'm making over 200K a year. And I'm in a good spot financially, just saving money. But I was completely miserable, Satch. I just was like, I felt like I had like golden handcuffs, and I felt like I couldn't leave this job because I knew, everybody my age wasn't making that kind of money, but I wasn't passionate about that. It was like a short term type of deal to just get money, buy a car, get rid of my debt. And so it was December of 2020 or December of 2017. I read Rich Dad Poor Dad, like a lot of people, and I just trying to learn about, passive income and assets. And I was like, you know what, I don't want to do my job anymore. This sucks. I need to figure something out. So that next month in January of 18, I quit my job. I had no plan, literally. I didn't know anything about multifamily, did not ever, I'd never heard of the term syndication when I quit the job. All I knew was this broad theme of real estate. And I wanted to somehow create money through real estate. And so I was going to flip homes. Actually, that's what I was going to do. I was thinking about flipping homes. So I quit the job. I had no plan. I'm living off of savings. I had almost 300K of cash that I had just relentlessly saved. Plus, I got a little bit of bump from selling some equity I had in that company. And I was going to flip homes. Then I learned about investing. I started listening to books, listening to podcasts, going to meetups, conferences, and those next few months, I learned about the whole concept of syndication and leveraging my time and energy and leveraging other people's money to have a partnership. And that's where it kind of clicked. And I looked at multifamily. So that's kind of how I got into it. I know that was a lot, but that's kind of how I got into that initially.
No, yeah, no, pretty good. I'd love to hear and all that. First, I want to know your thoughts on college. Do you
Yeah.
think it's essential to go to college? Do you think if you were to do it again, would you actually go back and get a degree, or and actually you got your MBA, right? So,
It's a good question, Satch. Yeah. So I can support both arguments. I know a lot of people say you don't need to go to college to be successful. Some people argue they're just indoctrinating you. You're going into student debt. And some of that stuff I agree with. But I can tell you, like we just had our first kid 6 weeks ago, like a newborn baby boy. And I want him to have the best education. So I am going to encourage him and tell him to go to college. But I think that it makes total sense because when I was going to college, so I take great pride, Satch, that in my undergrad, I had a 4.0. I got no B's. And I'm not the smartest guy. I was just super disciplined, and it was like a competitive thing for me that I wanted to get just A's, every single semester for 4 years. And so for me, it taught discipline, time management, stress, how to work under deadlines. It gave me a lot of skill sets. And I think too many people get caught up and say, okay, well, you're going to go to college and get some BS degree, and that's not going to translate to a job. But now, as an employer, Satch, I'm hiring people and interviewing people all the time. And I can tell sometimes people don't have a degree because they're lacking basic reading and writing skills. And it's not to say everybody who has a degree is dumb. That's not necessarily the case, but you can see a correlation. And some people are dumb and they do have a degree. Okay. So you can't generalize it, but I think it gives you a base foundation of education, which is important to communicate with other people. I don't think it's the be all end all, but my whole thing is like, why not give yourself more resources and a competitive advantage? Right now, with that said, I went to school for journalism, and I was taught you got to go into the career that you get the degree in. So I was really conflicted and discouraged after I decided I just spent all this money, this time, because my parents didn't pay a dime. Like I was working full time nights and weekends during college, 40 hours a week to pay for school, and I had student loans and I had to pay all that stuff off later. But for me, it actually motivated me. Like I need to go make money to kill this debt. And so I think it gives you a foundation, and you don't necessarily need to go into that industry, but it gives you, disciplines. So I think people should go to college, but don't let that limit you, because you might go get a degree and then go on and be an entrepreneur. And you shouldn't feel like you wasted your time because it gave you skill sets that you can translate to other stuff.
yeah, yeah, that's an interesting point of view. I'm kind of like you as far as being able to support both arguments. I did not go to college myself. I'm a college dropout, but I can. I think that the people that have it in them to have that discipline and that self drive to pursue higher education, whether or not you go to college, like you, I can clearly tell that you would have been someone that even if you would have not gone to college, you would have found a way on your own to learn the skill sets that you needed to learn to be to read better, to write better, to better yourself, as opposed to there's some people that like the ones you're saying, right? I can tell when somebody doesn't have a degree because not all the time, but sometimes they
Yeah,
lack those basic skills, right? And I think those people are those that they were just meant to. They need somebody to be constantly pushing them. So college is good for
exactly.
100%. It's good for them, right? Because they need that structure, that rigid, regimented schooling. And so yeah, I mean, I think it just varies, right? But
And there's some people too, Satch, not to cut you off, that are really good at going to school and they get the degree, and then they're kind of worthless in the professional
yeah,
field. You know what I mean? It's like you're not like, all you were good at taking tests,
Right.
so you can't paint a broad brush. You could be successful either way. So yeah.
Yeah, yeah. What was the drive behind making money? Like you were, I
Yeah.
know at one point it sounded like you were making good money, and then you enter an industry where you were not passionate about, even though you were making good money. So I can see the desire to want to leave that industry and pursue something else because not so much because money related, but more so because you were not enjoying what you were doing. But would have you been in an industry where you were enjoying what you were doing and you're only making $200,000 a year, would have you stayed there? Or do you think you would have still be $200,000 is not enough? I need to go pursue something else.
Yeah, that's a great question, Satch. Well said. And so it's funny you say that because I think it's a couple things. I think it was my upbringing. Like I was always I love my parents, but they really had a scarcity mindset. I realize in retrospect. And I remember like 08, 09, like they filed for bankruptcy. And as a kid or whatever, or you're growing up as a teenager in college, whatever, you don't really feel that, right? Like if your parents are doing it, you don't really feel poor or anything. We weren't like poor. Like I always had like food and everything, but you could always just hear comments like scarcity mindset. And I think that, when I went to college, they made it very clear we can't help you, right? I wanted to go to college, so I had to take out loans and I had to work and I was working to, support myself. And I think that it just gave me that sense of independence at a young age. And when I got out of school and I'm like, okay, you're in the world now, I got to cover my rent, my food, my car. There's a lot of stress and pressure that comes with that. And at the time it was overwhelming, but but I'm happy I did it because I think, and there's no right or wrong way I'm not trying to like give advice on how to parent your kids, but I think it's become more common. People are living at home into their mid or late 20s, and great, but they're not feeling the pressure to become independent. And me, it was like the pressure, like you better make money, otherwise you're gonna go broke, literally. And I can't move back home. My parents said, don't come back. And it's not like I have a bad relationship. They
Right,
were
right,
just,
right. Yeah,
we don't have
yeah,
room for you. Yeah. And I was like,
yeah.
okay, fine. I was like, fine. Okay. I don't need you guys then. It's just kind of like that independent mindset. And so for me, I was like, I have this debt. I want to kill the debt. I'm like thinking Dave Ramsey mindset. And I'm doing the math and I'm like, with what I'm making right now, I'm going to be in debt for like decades. This sucks. I need to go get an aggressive, high paying job and just focus on these short term goals. Short term meaning the next 2 to 3 years. I want a better car. I want to kill my student debt. I want to be financially free. And then you get into a sales job, which is what I was in, where you really have no ceiling. And that was exciting for me because I'm just like a competitor. I like the idea that if I work harder, I can make more money and I can progress. But then I got to the point, Satch, because this is another part of your question, which is a really good question. I don't think anybody's ever asked me that, and I've been like 50 plus podcasts. So I like that you framed it that way. I got to the point where I had paid off the debt. I had the house. I was a single guy. I should be super happy living the life. And I was miserable and empty. And I was chasing money. And I realized money did not make me happy. Like every month, I was like a director of marketing, 6-figure salary, another 6 figures in bonuses, where I had to hit high numbers every month. And every month you reset. And when I got started getting to the point where I was trying to hit the number to make a certain amount of bonus, I was just like empty and I couldn't get there. And I realized I have to be motivated by the competition and the ability to take on challenges and help grow the team and the company. That was the stuff that got me excited. And the money is more of a residual benefit. Who won't take the money? But when that becomes the focus, it is really hard to be motivated. And I think that's everybody. And so that's one thing I realized is like it was double. It was both. It was like the money's not going to make you happy. I would take a little bit less money to do something I was happy about. But at the same time, I wanted something that was like so challenging and I had to overcome big things. Like when I quit that job, I was living off savings for 14 months before I bought the first deal. And I like lost all my confidence, my self identities. I'm just burning through money that I had worked for years to save up. And it was very discouraging. And I told myself, 6 months in, I was like, you know what? Screw it. I'm already this far in. Whatever I'm going to do, I'm going to make it so big. I'm going to be a billionaire. Like I'm just going to basically launch a missile and I'm just going to take it as far as I can do. Because if I'm going to do this and not be an employee, I'm going to do it big. Because what do I really have to lose at this point? And so that's kind of the mindset I started to adopt is that you set a goal so high that you may never reach it. I feel like as humans, we all want that sense of progression, right? And so I've heard of people that have a goal and they meet the goal and then they just become complacent and satisfied and they become depressed, you know? And so it's like, I want to have a goal so big that I'm constantly chasing new exciting things. And it's not about the money. I want the money, but the money gives you resources to do more exciting things, you know, and do other different things. So I think for me, it's like, I want the challenge of building a big company, dominating my competition. The money will come with that. And you're going to make a lot of people wealthy along the way. You're going to build really cool alliances and business partnerships. And I think that's what kind of fuels me.
Yeah, sounded like from different things you have said that being in something challenging and having competition around you is what drives you. So I can clearly see your underlying behavior of where you were feeling stagnant, just chasing the money. And because uh, I think when you don't uh, below a certain threshold of money, money is the object, right? If you look at Maslow's pyramid of needs, right? I think when
Yep.
you're not satisfying those first three sections of the pyramid, money, you're like chasing money around. But once you have achieved those, right? You have food, shelter, love, security, and all that stuff. After that, just chasing money. I think it starts losing its value.
Yep.
Um, and as far as money itself doesn't lose its value, but more so in the trying to fulfill you, it starts losing its value, right? So
Yep.
I like it, man. You mentioned about you almost went into flipping homes, and then you said that obviously you didn't, right? What was
Yeah.
the thing that made you not want to do that route?
Yeah. Good question. So, again, I knew nothing about real estate. Like I'm not exaggerating. I think people sometimes see us now and they think, oh, Zach must have had like a rich dad or like a real estate uncle. I literally had no connections. I did not know anybody in real estate, especially multifamily or commercial real estate. And I didn't have any experience. And so that's all I knew. Like you either be a real estate agent or you flip houses. And I was like, okay, well, let me go flip houses. I know people can make a lot of money. And the more I started learning about it, I was talking to other flippers. I was like, this is basically what I just left. Because at my job, the first every month in a sales job, you have a new quota that I have to grind for 30 days to hit to get that bonus. And then the pressure is back on. It's very transactional. And that's the same thing with the house flipping. It's like I have to keep on running in this hamster wheel and flipping the houses to make the money. And if I'm not flipping a house, there's no money. And there's a lot of execution risk. You're dealing with, you know, construction guys, et cetera. So as I started to really broaden my education, and again, I didn't even know where to start. I'm Googling, you know, real estate investing, passive income, cash flow. I'm literally Googling stuff, just listening to all the podcasts I can, reading books, start going to local meetups to learn about stuff. I realized, okay, these people are talking about building wealth through investing, not flipping houses. I mean, maybe flipping houses is a good way to generate cash, which you then use to invest. And so I quickly realized I want to be investing. And so what I first started doing after I said I don't want to flip the houses, I learned about mobile home parks, Satch, because I heard it was a good cash flow vehicle. I wanted cash flow. And I was trying to buy my own mobile home park with my 300K of cash, like on a seller carry loan from a mobile home park owner. So I cold called over 90 mobile home park owners in Phoenix. Only a few of them answered. And, you know, one guy, you know, was kind of open to it. I did the math on it. And even if I would have got it, it was like, I think it was like a 12 or 13 unit pad. I would have maybe made $2,000 to $3,000 a month of cash flow, but then I have no cash. And then I'm like, well, then what do I do? Like, I'm just making a couple grand a month. And that would have covered my expenses at the time. It wouldn't now. But I was like, this doesn't make sense. So I was like, I had this X amount of money that I thought was a lot. Then when I realized I learned about real estate, I realized this is not going to go far at all. That's where syndication was like, bingo, that's what I want to do because I can go out there and grind and hustle and I can earn sweat equity and I can bring value to other people that don't have time. And so that's where, and I realized I could scale that thing with no ceiling.
It's interesting that you had the initiative to go to syndications right off the bat because I've been on both sides of the equation, right? I've flipped houses, I've wholesale houses, and I've been in syndications, and so I've seen both worlds,
Yep.
and it's very hard for people that flip houses to fathom the idea of moving into the syndication space and doing multifamily, larger apartment complexes. It just seems too intimidating. But for some, that's typical, the typical path they take, right? They go from nothing to flipping houses to learning and eventually moving into the multifamily space. But you
Yep.
skip that whole thing together. What do you think? Did you even have any intimidation?
Oh yeah.
Face,
Yeah.
getting to you, or you were like, ah, screw it, I don't know anything. I might as well just go for the big one.
Yeah, no, I was super intimidated. I overthought it. I had analysis paralysis. I would get severe anxiety. So I think the benefit that I had, Satch, was that I was young. I was like 27 when I started getting in, 26, 27 when I started like researching and getting into it. And I would listen to podcasts of other people just like you that said, yeah, I started out flipping houses. And a lot of these podcasts at the end would say, well, if you could do anything different, what would you do? And they all were like, I would have gone to syndication sooner, right? People kept saying that. I'm like, well, if people are saying this and I have the benefit of being young and learning about this, why would I start flipping houses? Like, and they all, and everybody talks about economies of scale, the bigger is better. I was like, I need to go do multifamily. But then it worked kind of against me, Satch, where I was like, I have to start my very first property, 100 plus units. And I was only targeted. And that was just like, it was like climbing Mount Everest 10 times in my mind. I was like, how the hell am I going to do that? It's so overwhelming. And so I started like cold calling. This was super scary. This was really hard for me. Cold calling brokers, property management companies, and I would just like wear a tie, meet with these guys in person, and I felt like a total imposter. But I had to kind of fake it till I make it. I said, "Hey, I've got a group of investors. We're looking to do this," and some of them didn't even take me seriously. I think some of them kind of did, but that was a big step for me to at least reach out to these different professionals like attorneys, brokers, because I didn't know anybody and I felt like an idiot and I felt very intimidated, but I had to kind of get over that. And then that gave me confidence. It's like you take all these different steps that are milestones. Like after meeting the first broker, I was so nervous, sweaty palms, shaking. And then you're like, okay, I did that. I'm going to meet with some other brokers and tell them what I want. Some of them are kind of jerks because they know that you're not real and it really discourages you. You want to quit. And then some of them are cool and it gives you encouragement. And then I remember I toured my first deal with a broker, and that gave me a lot of confidence. But then you feel pressure to get the broker feedback, and you're worried about what they'll think. Then I remember we sent our first LOI, and I was overthinking this like for a few days. Like I was supposed to send it, and I just was so nervous. You send the LOI, and then they say no, price is too low, and you almost feel relieved. Like, oh, thank God. Well, at least I sent it. Well, I did what I could.
Right, right.
But all these little steps give you confidence, and then finally, one you send an LOI and they accept it, and I was like, oh shit, like what do we do now? Because now there's an expectation that you got to take the next steps and you got to put up earnest money, and that was super scary. But it's like anything; it's constantly pushing your comfort zone. Even now, like I get nervous doing speaking events all the time. I get like anxiety, and a lot of times I want to just back out or quit, but I just push myself to do it and it's never as bad as I think. And then when I'm done, I feel really good and I feel relieved and I feel like I've achieved something. And so for me, it's just always pushing the comfort zone, taking on scary stuff and the fear. And so yeah, I think on the outside it looks like some Superman thing, but I had to go through all these steps. I think that I just skipped a lot of steps that people do because psychologically I knew this is what I got to do to get to my goals. I need to collapse a time frame. And I was leaning on it's not really advice. I didn't know these people, but like other interviews and podcasts of people that said, I wish I would have gone bigger faster. And I'm like, well, so the first deal was 36 units that we bought and we tried to syndicate it. Nobody wanted to invest. So I had to bootstrap it. Like I found a 1031. I put all my money in the deal. I found a few other people and we did a tenant in common, a tick structure, and we got the thing done. It was long, grueling 4 month escrow. The first 15, 20 deals were all like, you don't know if they're going to close. Every single deal is just, you're trying to put the money together. And so, yeah, every deal is like its own journey and real big challenge. But that's
Yeah.
kind of we did it. So in retrospect, it looks like this crazy big growth, but it feels like it's been 15 years. And I could probably tell you a story for a lot of these deals that I just remember all the adversity.
Do you think that you work more now than you did back when you had a W-2?
It's a good question. I would say no. I would say no. And I would say I can tell you this that so I would like the end of the year and early this year in 2024, I was grinding too much. Like I would come to the office at like 8:30 or 9. and I would leave at 9 or 10 p.m. Like, and I'm not exaggerating, like legitimate 12, 13-hour days at the office, and then go home a lot of times and do emails to like 1 or 2. And it was not healthy. I wasn't getting enough sleep. It was wearing on me. And having this baby recently almost was like a healthy reset, because what it did is I've it's forced me to get to the office earlier, leave the office earlier, spend time with, my son and my wife at night, and get more sleep. So now I'm getting 8 hours of sleep. And part of that, I've read a few books in the last 6 weeks, which is all about scaling and how like CEOs bottleneck themselves by taking on too much. And so I've already delegated a lot of things that I should have already done a while ago, because the staff that we have can do a lot of these things better than me anyways. And I'm trying to make a concerted effort to focus on higher level stuff, like my highest and best use. And so taking a lot of little, like I got an executive assistant recently. I used to handle all the communication with the brokers. Even though we had an acquisitions manager, I kind of micromanaged that process because I want to control deal flow. And I realized I don't need to do that. Like, so I told our acquisitions guy, Brady, said, you need to handle all future communication. I have our investor relations staff taking the majority of new investor phone calls, because I just can't be spending so much time. We have a team for that. And I'm looking to do this now with our higher level staff too. So to answer your question, I'm working less now, but it's more about higher quality efforts than the quantity.
So it sounded like you went through a period of working more probably than
Oh
you
yeah.
were in W2, right? And then
Yeah, I
the
did.
baby gave you a reset. Do you
Yeah.
think that overall, so it's interesting because I kind of changed as well when our son was born. I was in the same, sort of in the same schedule that you were of,
Yeah.
working to know, morning to the evenings, sometimes even to the morning, and like your head's just, it's always running, right? It's always, you can't
Yeah.
shut it off.
Not healthy.
You get emails on your phone, wherever you are, you just feel inclined to reach out to it and just respond like, dude, how long is it going to take, right? Just one quick email, just one quick answer, one yes, one no. And it
Yep.
just, from there, it just takes off and never stops, right?
Yeah.
And, but once my son was born, I realized I cannot keep doing this. And so it really, it changed me a lot. It
Yeah.
changed me what I wanted to do with my future. I don't know if it changed
Same.
a lot on you.
It has. Yeah. No, I'm with you, Satch. It makes you get into this, especially in this day and age, right? You got social media, you have text messages, you have emails. Now I have WhatsApp because I'm in some groups that I'm getting WhatsApp. So all these messages constantly bombarding you, and you become so reactive. Like the day is controlling you. You're not controlling the day. So what I did a couple months ago is, like, I've never had Instagram because I just feel like it's unhealthy, psychologically. We have a company one, I don't get on there, but all I've had is LinkedIn, and I took LinkedIn off my phone because I don't want to go on there. So like LinkedIn is very important for marketing, but our team runs it now, right? So I'm not on there ever scrolling. Sometimes I'll go on there and just check like my posts, but I'm not looking at other people's stuff anymore because it doesn't affect me either way. I don't want to worry about other people. And then yeah, I started to, so like when I quit the job in 2018, I read a book called Miracle Morning, right? And it's all about, you probably have heard of it, Satch. It's about like waking up early, journaling, praying, meditating, working out. So I re-implemented that a few months ago. Okay. So I've been doing that every single morning. I wake up at 4:30 a.m. every day now. I'm going to bed between like 8:30 to 9:30. So I'm getting 7 to 8 hours of sleep. I'm journaling. I read a book recently called, it's by Dan Sullivan. He's got a few good ones like 2x to 10x, Who Not How, and the gain and the gap. And so I'm now journaling at night, my goals, like my wins for the day right before I go to sleep, and what my wins the next day are going to be. Right. And that's really important because it just allows you to reset. Before, Satch, I get home at 9 or 10, I go to the gym. Like my gym regimen has never fallen off, but I was working out so late. Then I'm going to bed late. It's not healthy. Now I'm working out in the mornings, and I come into work refreshed, energized. I can leave at 5 or 6, spend time with the family, go to bed early. So yeah, all these things make a difference. And a lot of the little emails I had were just stupid stuff. And I trained the executive assistant like how to delete and mark as read, or like delegate a lot of it. And so my emails don't feel as overwhelming. And yeah, I mean, you can just kind of control more of your life. And it just makes such a big difference. So it's funny you said that because I can relate.
Yeah, and that's funny. I do the same thing. I deleted all my social media apps from my phone,
Good.
and so I don't use it. I have a social media person that that interacts. If I'm like a drug dealer, a good drug dealer, I
Yeah.
only sell it, but I don't consume it.
There you go. Yeah,
I
that's
don't
right.
sell through it.
Yeah.
Another book, for anybody in the audience as well that is just had a son, or even if you have been already with your kids for a couple of years, I read a book called 18 Summers,
Okay.
and that fully changed, drastically changed my mind. Obviously, by the title, you can assume what it is, right? You only have 18 summers with your kid.
That's a
Um,
good point.
the way when you start reading it, it really puts things into perspective. Very tiny book. You can read it in like a couple hours, but it's really good. Um, I want to take this back into a finance direction. I know you talked a little bit about the Dave Ramsey philosophy and how you were doing that at first, and now you're more just to kind of separate them into two contrasts. I'll say there's a Dave Ramsey thought process and there's a Robert Kiyosaki thought process, right? Dave Ramsey's save money. Robert Kiyosaki is saving is for losers, right? And it
Yep.
seems like you were doing one and then you switched to the other one. What are
Correct.
your thoughts on the way? Should people ignore one and always go use the other one, or should
Great point, Satch. Great point. Great point. Because I no longer agree with Dave Ramsey. And so here's the thing is that I think that both strategies, call it the Dave Ramsey strategy and the Robert Kiyosaki strategy, I think that they are effective based on where you're at in life, right? I think that you have to be aware of, okay, where am I at? And they're stepping stones. So I think Dave Ramsey is like your initial stepping stone. And it's all about, get rid of unhealthy debt. Okay. So like, and there's some stuff I don't agree with Dave Ramsey even from the beginning, which I'll go into, and I'll give you an example of stuff I was doing that was actually, I think is stupid in hindsight. But like paying off student debt, aggressively killing student debt, and maybe car debt, makes sense at that point in time. Because if you are just getting consumed by debt and you're not saving up enough money, it can make sense. But once there was one thing I was doing was a Dave Ramsey strategy, which I learned the hard way was not smart from my perspective, is that I was making double monthly payments on my mortgage payment. Okay, so I was making two payments to the regular payment plus an extra payment to the principal every month because Dave Ramsey's like, oh, pay off your house, don't have house debt. Well, what happened was I went to go sell my house and it appraised for lower than I thought. And so I sold the house for less than I thought. And it just made no difference. It's like I was basically pouring money to pay off down this principal when I could have been investing that money and
Yeah.
getting a yield that was higher. And I also aggressively paid off my first car. Okay. I killed it in like less than 12 months. I was just all my cash. I was just paying down the principal, which, some people don't want to have debt. Like, so a lot of this is arbitrary. Some people say it's dumb to have debt, but from a true finance perspective, we have two vehicles and I put the minimum down on those vehicles. I financed both of them because if I'm going to go buy a car, call it like my truck was like 75 grand. I have a Raptor. It's like a few years old. Now they're like 150. It's crazy. But like I bought it for like 75K and I put like $5,000 down because I was like, if I put 75,000, I could have bought it cash, but why don't I just put 70K into our own fund, which pays me 8% per year? And my interest payment was 4% when I bought it. So I'm making 4%. You know what I mean? So it's like those are the different things. Like Dave Ramsey would say that's not smart, but Kiyosaki would say use your assets to pay for your liabilities, right? So I put 70K in the fund, which pays me 8%. I use that cash flow to cover the liability, which was the truck, and I'm making additional money on top of that. Instead of just putting $75,000 into a car that's going to depreciate and I'm not going to be able to sell it and get that money back. It's going to be gone.
Right.
So those are like kind of the differing philosophies. So I think that you need to understand that there is a level of debt that doesn't make sense, right? When you're over leveraged and you have, like student debt, I think is the worst. I think you should try to aggressively kill that because it's typically high rates. But that's kind of the shift that I learned from Kiyosaki, Satch, and it shifted my whole mindset.
Dude, I don't imagine you driving a Raptor for some reason. I imagined you sort of like a BMW SUV kind of guy.
Oh man, Raptor. I love the Raptor all day. Yeah.
Southern guy.
Yeah.
Phoenix, Phoenix guy.
Phoenix guy. Yeah.
Um, what is some a lesson you learned in real estate that you wish someone had told you when you started off?
Yeah, it's a good question. Um, I think one important thing to that would have been great, and I'm realizing it, is to just be aware of like long-term real estate cycles and learn indicators and be aware of them. Because, we've been doing this for about 6.5 years now, and the market was just going up and up and up. And everybody says, is there a bubble? Is there a bubble? And it keeps going up. And then we had this historic interest rate increase, right? Just skyrocket in 2022. And at the time, literally nobody saw it coming. If people say they saw it coming, I don't believe them, because you had like Blackstone, Goldman Sachs, none of them saw it coming. They
Didn't was it BlackRock they wrote off like 1.3 billion dollars of their sheet? It might be even more than
yeah,
that. I don't remember.
probably, yeah. You have the biggest institutions in the world that you think would have some type of inside track, or the smartest people, that are losing money, getting foreclosed. They didn't see it coming. When you look at it in hindsight, it makes total sense. It's like, okay, I mean, COVID was a black swan event, but the government pumps, I don't know, billions, trillions of dollars into the economy, and that's going to result in inflation. It's just inevitable. And when inflation takes off, the Fed has to aggressively increase rates to fight the inflation. So, like, philosophically, it makes total logical sense, but nobody really saw it coming. And then the other thing too, Satch, is supply and demand, right? It's like in Phoenix was just taking off like crazy. All the Sun Belt markets across the country were, well, because they were so hot and doing well, all the developers from like 2019 to 2021 were just building apartments like crazy, because this is where all the people were moving. There was a huge demand. Well, then in 2023, all those apartments get delivered, and inflation catches up to people. The COVID stimulus checks stop all at the same time. And all of a sudden, all the biggest, hottest Sunbelt markets are oversupplied. And there's more housing than there are people to live in them. And it creates a market softening. And so these are just basic principles that over time they repeat themselves. Like I read Sam Zell's book. He's the founder of Equity Residential, and he was talking about how he became wealthy and successful by buying existing cash flowing value add deals. And when he started to try to develop, he lost his shirt. And his biggest strategy, the way he was like one of the first to do this, is that he was intentionally going to markets that did not have a lot of supply. And when they started to get a lot of supply of housing, he would get out. And Sam Zell, obviously he was really successful. But he will tell you, even in the book, he's not the smartest guy. He's not some like Ivy League educated guy. He was like, just a hustler, a grinder. And so it just goes to show you, it's like, okay, this isn't necessarily rocket science. Like, we have to look at these things and we have to prepare for them, and you got to think long term. Unfortunately, we've been able to really, shift our portfolio and be in a good spot to not, have any capital calls or any issues with interest rates. But a lot of people are getting foreclosed on. Capital calls have been pretty common. It's been tough, with this massive increase. And so it just kind of goes to show you, like, hey, you need to look at these historical cycles. What are some of the indicators? And then how can you kind of adjust, going forward?
You brought up a point that um, I had a question that when I was thinking about kind of questions to ask you, there was something here that I wrote down. I was listening to this podcast from Ty Lopez. Hate him or love him, he's got a lot of controversial views, I think. But I think he poses some very insightful questions. And he mentioned that from studying that he has been having a lot of access to a lot of billionaires, and one trend that he noticed is that the majority of ultra wealthy people don't start companies or businesses. He calls it a DOE, distressed or early. They will either buy companies when they're distressed, or when they're early on in the making. If you
Right.
look at Elon Musk, right? He didn't create Tesla. He bought it when it was distressed, and he invested in the company and then took over and became a CEO,
Oh,
right? So
I didn't know that. I didn't know that
yeah,
about it.
none of the companies that Tesla, PayPal, all those, he didn't create them. He
Oh,
he
wow, I didn't know that.
So you can kind of see that trend, and I think I can translate that to real estate deals in the sense that, like most of the deals that we've done, right? They're distressed. What are your thoughts on that? Do you think there's some merit to that thought process?
Oh yeah, no, I think you're exactly right. I mean, that's the cool thing about real estate is that the more I've learned about real estate, you can apply the principles of real estate to pretty much any business. It's almost like the foundational industry to apply to other business lines. Because yeah, you're right. I mean, at the end of the day, what we're doing is we're trying to buy low and sell high, right? And so we're trying to buy deals at a certain basis, add value to them to increase the value and sell. It's the same concept that every private equity company does. I mean, if you want to just boil it down to simplest form, private equity is just about flipping businesses. That's what it's all about. So like private equity companies will come in, whether it's tech, healthcare, whatever, they're going to buy a business or a portfolio of businesses, roll it up, infuse money, grow it, and then repackage it and sell it to another private equity company for a larger amount. And it's just a constant flipping game. And that's what real estate is. It's just it can be longer term. And there's obviously different strategies that you can long term hold it, you can refinance it, but the idea is that you're getting at a basis, so that in the future it's going to increase in value. And that's kind of what you said. You're either distressed or early. So right now, where as we record this in May or June of 2024, there are some distressed assets out there, and it's a good time to buy deals, because you're getting deals at, values that are 20 to 30% lower than they were the last, 18, 24 months, but they're actually producing more revenue than they were 18, 24 months ago. And it's all because of
Yeah.
interest rates, right? And
Yeah.
so, yeah, I think that's a really good analogy.
Love it. Dude, we're reaching the end of the podcast here. I don't want to keep you any longer because otherwise I'm robbing your time from your son.
No,
Uh,
it's all good. No
I want
worries.
to, I want to get, I don't want you,
I,
family is number
yeah.
one in my eyes. But
Yeah.
last question I want to close it up with is what has you the most excited for in the next 5 years?
Yeah, good question. Good question. So, I mean, I was telling you, Satch, how I'm like really trying to focus on freeing up my time, focus on bigger, more high level, exciting things. And so we want to keep obviously growing Rise 48. We're going to be hiring people that can just grow our ability to brand the company, to raise more capital from different sources, partner with people like fund managers. And so I'm excited about taking like a higher level role and trying to put the right people in place to take the company to an even higher level. We love the retail syndication component, and we'll keep that, serving our individual investors. We also want to have like an institutional component to the company. And so we're going to start to build that out where we have like an institutional fund or like our own REIT. And we've also been working on creating our own investor portal for the last 3 years now called Fundamental Portal. So we've designed a portal from scratch with software engineers, and I haven't done anything. Like literally, my partner Bicker and I just fund it. We have 4 employees we've given equity to in that company, and they run it. And so I'm excited. The value I can bring is trying to leverage my relationships to grow it, right? To create strategic partnerships, different people, different operators. And so now it's more about like leveraging my relationships and my time to build the companies, and grow them, but let other people focus on the day to day and stuff like that. So I think that's kind of the exciting thing the next 5 years. And I mean, we feel like from the real estate perspective, we grew quickly, and a lot of people want to say, "Oh, well, you guys were lucky. You started during a strong market. It was all the market." And there's, validity to that. But and people say you haven't been through a downturn. Well, we're going through the downturn the last 24 months. And so we're excited that we think in the next 24 months, interest rates will start to cut at some point and the market will recover and we can get through it unscathed. And a lot of our competition has just crumbled, and we can show people, hey, we battled through, we protected investor capital, and we actually grew through that fire. And then we think we're going to grow exponentially after that because it's just going to help our track record even more. So that's the exciting thing is like right now we're in the storm and it's been tough, but we're battling through and we feel confident we'll get through it. So on the other side of that, we think there's like a ton of growth that will happen.
That's awesome, man. I'm really excited to keep seeing you guys grow and seeing what you're doing. Um, are you guys going to start packaging and selling the fundamental portal for other companies to use that, kind of like InvestNext, Syndication Pro, and such?
Yeah, it's available now. Yeah, so anybody can sign up for it. It's fundamentalportal.com. Whether you're an operator, a fund manager, a capital raiser, that's ready to go. So it's a fully built out portal. We also we'll do all the fund admin for you. So it's that you don't have to be associated with Rise 48 at all. It's a completely different company, and we'll do all the monthly reporting, distributions, K1s for anybody. So yeah, it's available for all third parties and competes with all those portals that you just mentioned.
Cool. That's awesome, man. I'll have the link there to show notes,
No, thanks, Satch. I appreciate
fundamentalportal.com. Cool.
it.
Zach, well, it was awesome having you, man. Really excited to seeing you guys grow and hopefully continue partnering on more deals together. And maybe we'll have you next time once you guys put all this REIT together and
Yeah.
maybe Rice 48 goes public. I don't know.
Yeah,
Good.
I know. We'll see. We'll see. Yeah. No, thanks so much, Satch. Appreciate you having us on, man. Good to see you.
Yeah, good to see you as well.